So Telefónica just dropped their latest quarterly report, and it really tells a tale of two different stories. You've got this rock-solid performance in their main markets, a planned temporary hit in Germany, and a really huge bet on future tech. We're going to break down exactly what that means for this telecom giant right now. Let's start right at the top with the CEO's own words. This really sets the stage for everything we're about to see. The key phrase here is disciplined execution. It's all about the strength coming from their core markets, especially Spain and Brazil. Keep that theme in mind. So what are the big takeaways? Right here. Think of this as the TLDR for the whole quarter. Revenue is growing, they're on track to hit their yearly goals, and super important for investors, that dividend is secure. All in all, a really solid, predictable quarter. Okay, so here's how we're going to break all this down. We've seen the highlights. Now we're going to dig into that strong performance in their core markets. Then we'll unpack the challenge they're facing in Germany. After that, we'll look at how they're investing in future growth. And finally, we'll get to what it all means for the bottom line. First up, let's talk about the engine room. So where did these solid results actually come from? Well, it's really all about the fantastic performance in the company's two most critical markets. In their home market of Spain, revenue climbed a steady 1.6%. Now, that was helped along by a record number of broadband customers, which just goes to show how strong and stable they are on their home turf. And then you look at Brazil. Whoa, a massive 6.5% organic revenue growth. And this isn't just a big number. It shows they're still the market leader and that their growth is actually outpacing inflation. That makes Brazil a serious powerhouse for the whole group. Okay, but it wasn't all sunshine and roses. To really get the full picture, we've got to talk about Germany, where the company faced some pretty significant, though totally expected, headwinds. Yeah, this chart, it's a completely different story from what we just saw, right? Revenue down, earnings down. And at first glance, you might think, uh-oh, what happened here? But there's a really important story behind these numbers. So what's going on? It all comes down to something called the one-in-one effect. Basically, a big partner, 1&1, is moving its customers off of Telefónica's network. The key thing to remember is, this was not a surprise. Everyone knew this was coming. It just makes the numbers look bad for this quarter, but it's a temporary hit that they've been planning for. And this table just lays it all out perfectly. You can see so clearly how the positive momentum from Spain and Brazil is doing all the heavy lifting to balance out that temporary managed challenge in Germany. It's the classic balancing act of a global company. All right, so that's the present, but Telefónica isn't just treading water. They're making some really big bets on what comes next. If you look at where their money comes from, you can see that regular consumers are still the biggest slice of the pie. But look at that B2B or business-to-business segment. That's a pretty chunky 23%. And honestly, that's where the really interesting growth is happening. And the star of that B2B show? No question, it's Telefónica Tech. Just look at that revenue growth, an incredible 21.6%. This is so important because it shows they're shifting from just selling you a phone line to selling high-tech digital services like cybersecurity, cloud, and AI. This is their engine for future growth, plain and simple. And this investment, it goes way deeper than just the services they sell. They're basically rebuilding their network from the ground up. We're talking about using AI to make their networks run themselves. They're leading this global push through something called Open Gateway to make it way easier for developers to build new apps on their network. And of course, in Spain, they finished this massive project to switch from old copper wires completely over to fiber, all while keeping a close eye on their green goals. Okay, so we have all this stuff happening. Growth here, challenges there, big future bets. So what does it all mean for the bottom line? Let's dig into the financial health of the company. For any shareholder, this is probably the first thing you look for. The dividend is confirmed. At 30 cents per share, that's management sending a clear signal saying, yep, we're stable and we are committed to our investors. Next up, let's talk about the debt. Net financial debt is sitting at 28.2 billion euros. And a number that big always, and I mean always, makes you ask the next logical question. Right, is that a problem? How on earth can they handle a debt that large? And here's the answer. The key thing here is context. They are absolutely prepared for this. They have a huge pile of cash on hand, over 16 billion euros. More importantly, that's enough to cover all of their debt payments for the next 3 years. Plus, they've structured it so the average payback time is over 10 years. That gives them a ton of breathing room and financial stability. So, When you put it all together, this quarter paints a really clear picture. You've got these strong, reliable core operations powering through a known temporary challenge. And at the same time, they're placing these huge, ambitious bets on a digital future. And really, that's the big question for anyone watching Telefonica. Can that exciting future growth get here fast enough to outweigh the challenges of today? That's the story to watch.